27 October, Friday, MEO with Cal. Now, the US stock market may see turbulence, all right, as the bond market recovers. Now, 2 days ago, I was telling people that the bond market will recover. And one of the reasons because Bill Ackman covered his shorts, that's one reason. Second of all, we all know that the 83 level is a very strong level for the US bond market, the TLT. And also, we seem to have some difficulty to cross at 5%. And the thing is this, when the 10-year yield failed to cross the 5%, right, after so many time, as a trader, we notice something is going on. Because when people are telling you that, it will go through 5.5, 6%, but the thing is it doesn't go, something is wrong. And I feel that NASDAQ could be next in line for some selling yet again. All right, so without further ado, let's go into the details right now. Before that itself, disclaimer apply as usual, and thank you AIMS for the kind sponsorship. Okay, so a bit fast. Take a look on the US bond market. You can see very clear there's something that is not working out fine. Now, this is not the first time, the second time. In fact, for 3 days already, for 3 separate days, the US 10-year bonds try to hit the 5% mark. It went there, but every time when it goes there, it pulls back. And the thing is this, the way it's coming down itself doesn't look like it's going to blow up in the near term unless something really serious happens. So I kind of believe that, right, this will definitely move the bond market. And look at the TLT right now, you can see that there's huge volume, okay? There's huge volume of traders coming in to cover their shorts or buying. Look at the bond market. The volume itself have been very heavy, and look at it, last few days was even it's really beyond the average size. So I think that right, this at 83 level for the TLT has found a base level. Hence, therefore, I think that traders should be very careful now. If this is going to be proven right, if the bond market starts to go up itself, right, there will be interest coming in, and when that all happens itself, right, equity market usually will see profit taking, because one way or another, that means the money must go to somewhere else, right? So if the bond market is still right now for a very good price, a cheap price, that definitely moving away from equity market could be next. Now, one thing is that it could be due to this. The US GDP grew at 4.9%, and that's basically better than the expectation. Now, what is going on is so apparently the expectation was like 4.7%, but it came out better due to consumer spending. It's like everybody's spending like nobody business, but it's kind of like surprising because we have inflation going on. If you look at it right now, right, this is really incredible. Now, by doing this, definitely it won't create any form of recession. Because recession, we need to have negative growth. So we did have one in 2022 first quarter and second quarter, but surprisingly in third quarter, the market just suddenly jumped to a positive 2%. So I just feel that somewhere is wrong. Let's see from quarter 3 last year to today, quarter 2 this year, you can see that they've been at 2%, but suddenly this number is at 4.9%. Somehow it just doesn't make sense to me. In fact, it's right. I basically saw some article talking about there could be some arrangement, special arrangement accounting. I'll leave it there. I'll come out with you a new video next time. Now, one thing is that because of that, right, Janet Yellen is definitely very optimistic right now. She feels that the US GDP numbers is so good, that means that the bond yield can stay higher. Okay. Now, one thing is that why she wants the bond yield be higher, because she needs the money. So if the yield stays up, right, more people will basically buy into the bond market, and that is what they need right now, their lack of money. So with this economy better and growing at a better pace, that definitely helped her a lot. And the thing is this, right, she dismissed the suggestion that higher yield may due to worries of the rising US deficit, all right, or the worry about recession. She feels that this is just very normal. And in fact itself, right, she said that the US debt servicing burden will be a bigger challenge if the interest rate path stays higher. Okay, so basically for Janet Yellen, right, next week, there'll be a very big bond market auction, right? It's very big. They need the money. And of course, that is why I believe that, right, this so-called GDP number is kind of, created for this. So all I can say is this right now, what will happen? So look at it. You can see the blue line. It shows that the GDP numbers. All right, but the red one is a revolving consumer credit loan. Okay, so what's happening right now is basically means that, right, the GDP that's going up right now could be due to a lot of people borrowing and credit. So when people borrow on credit itself, right, this basically has a bit of issue. And you can see back there again, when basically, right, the revolving consumer credit loan and securitized had to go down, that is where the GDP comes down. It has always been like this. When the revolving consumer credit goes down, you actually see the GDP goes down. So now we have a divergence here, which doesn't make sense, right? So I kind of believe that, right, this GDP number has this very big question mark over here. Now, of course, would that basically also means that, right, there could be, because of the bond market now is at a tipping point. Now, some from writers apparently says that, right, because of this current issue right now, the term premium is at now the highest in 8 years. Now, what does it mean? That means that, right, the payout is very good. In fact, Treasury need to refinance up to $17 trillion of their current debt in next 2 years. And of course, with this steepening yield requirement, this could really basically bankrupt a country. So to me, it's all right. This is not a good sign at all. And of course, the return of the Treasury term premium, this is the highest in 8 years, also basically means that there's a lot of stress coming in for the economy. And the last time we saw this is 2021 and 2017. We all know that after that, the stock market the next year, which is like the following year, 2018, 2022, there was some selling at the start of the year. So that is the reason why I feel that there could be selling very soon, probably in the next 2-3 months, and the selling itself could be more than 10 to 15% because of this. And of course, right now, the deficit and debt is really increasing. And we had a big jump back to during the coronavirus pandemic. But now look at it. The federal debt held by the public itself is really at a crazy level, the highest level since World War II. So all this basically tells me that we should be very careful for the next few months. Right. So one thing is that, right, the one thing that's helping the market right now is the US crude oil that's pulled back from 88 recently back to about 83 level. Now, I've been telling people this crude oil will pull back, and it really happened. So now the thing is this, where will crude oil go? Now, I believe that crude oil will stay supported about $81 to $82. And based on this, so crude oil should be able to recover back to 88 in the near term. And of course, if that happens, the stock market could recover, because stock market and the crude oil market has a very interesting relationship within themselves. So this will actually push the stock market to recover a little bit. But if the market focus on the inflation issue itself, right, then that will actually cause the stock market to pause or even take a lower down position. But if you look at the technical point itself, right, this is what I see. This is basically very bullish, because you can see that we have the RSI creeping higher while the base was there. And now the thing is this, the RSI is back to near where we are the previous time, but the price is way higher. So this is actually a bullish signal. So I believe that crude oil will see $94, $95 again in the near term. All right, so traders, you can basically consider to keep this for long term and see how things go from there itself. All right, so of course, the main thing is that we all know that the Gaza issue is ongoing, but apparently, right, oil dropped because of the nation battling with its existence. And of course, we're talking about it because of this, which is the stockpile. Apparently, US stockpile rose by 1.37 million barrels last week. So of course, more supply will lower down demand. But the question is this, is it really the truth? And of course, it's all right. The recent coming off, people saying that, hey, how come that means that the Gaza thing is over? No, it's not over yet. In fact, it's still going to continue. I believe that the recent stoppage now is due to some political reason. Probably some people have already talked to someone else and said that let's cool down for a while, let me prepare myself and stuff like that. I think that's along the line, but it's too sensitive for me to mention this online, so I just let you know a little bit and then you move on, right? But we all know that if the crude oil price really goes up, right, it will actually push down the general activity. So every time when crude oil price goes up, right, it will push down the general activity, and that will usually bring into recession mode. So what we have right now, the crude oil is back above the zero marker, and the activity is now trading below the zero marker. So which means that right now we could really be looking at a potential recession coming in, not now in the official, probably in March or April. So traders, you need to watch out for that. And of course, for Dow Jones itself, right, as I mentioned to you, there is a very strong resistance somewhere around 34,000, which I mentioned, and I hope that you guys remember, because that was where the Dow came off all the way to now at 32,784. Now, we're not too far away from the Fibonacci number at 32,500 area. Used to be the first support. Now, it ever supported for a while, Then after that, the selling came in all the way down to 31,500. So I'm not half surprised to see that the market come down to this point here. So, it will go sideways for a while before coming down this way. So what do you think? Let me know in the comment box. Now, what is the main thing now is basically in the negative side? Well, first of all, we all know that the fear and greed index is near to the extreme fear. And usually when we are near there itself, the market may buy into it. So I'm not half surprised to see the Dow Jones get supported at 32,500 first initially. But one thing is that, right, from this FX evolution, stock trading retail trader sentiment are still very bullish right now. Up to 67% are still bullish. And for the Dow itself, was 65%. So all these basically tells you that if the retailers are still pretty confident, the market will not come down so easily. But of course, on the same note, what if the boys are dumping in to throw it to the retailers, right? The industry are buying in. Well, that could actually happen. So all I can say is this: NASDAQ itself is my worry because NASDAQ has free fall. He has a break below the trend line. You can see that it broke below it. And the thing is this right now, there is a very strong chance that it will be coming down to 13,736 level, because this is where the market recover. This was where the market got resisted. Hence, therefore, this 13,736 seems to be very significant. So if the market do come down, I think it will stop at 13,736 first. But if the market continue to fall, this could be catastrophic because it may bring it all the way down to $12,000. So that's the reason why you can see that now a lot of funds are moving out from the technology side because kind of people are worried. And you can see that from here itself, the tech shares shaded for $200 billion worth of shares due to its earning disappointment. But we all know that the earnings were not too bad, right? So now the seller could push S&P down by 10% from where we are right now. How come they don't tell us earlier then? So the thing is this: you can see that now even like Amazon stock reverse lower as they also concerned about the holiday outlook, right, and stuff like that. And we have other tech companies all have very good result, but then from the start of the day, the selling comes in. Now, to me, it's a very clear pump and dump exercise. I don't know how you feel it, but to me, I'm basically long in gold, long in crude, what they call partial shorts in the US Dow Jones. All right. So hope you like my video. Like, subscribe, and share with your friends. This is Kel signing off. Take care and have a good weekend. Bye-bye.